Welcome to The Interest. I'm Ryan Kingsley. Today is Tuesday, which means Shane Kidwell has some tech advice for making your business more efficient. And our friend Steve Richman leads you down the road to riches. So buckle up. But before the news, how's your social media game doing recently? Two of the mortgage industry's enduring challenges are reducing the cost to generate leads and moving beyond a transactional relationship with borrowers to one that's consultative. This becomes all the more challenging as borrower demographics and technology evolve. Digital natives are that segment of borrowers who have spent nearly their entire lives surrounded by digital devices and the world of social media. The first generation of digital natives is roughly 25 to 30 years old, but eventually every future borrower will be one. 3 years ago, Greg Scher, managing director at the Baltimore-based NFM Lending, realized that the first wave of digital natives he was beginning to see as first-time home buyers was only a sample of what the future of home buying would look like for first-time home buyers. Digital natives do as much of their shopping and learning on social media as they do their dating and doom scrolling. What he also heard was many younger borrowers clamoring for financial education. So Scher began building the Creator Collective, a likes to leads to loans origination strategy that has originators working as influencers, hawking homebuyer education to build a following of warm leads, and reverse the referral game in the process. Here's the story. The first originator that Greg Scher recruited to the Creator Collective was Scott Betley, a well-known personality in the world of mortgage social media. Betley had 500,000 engaged followers who were trying to learn more about how to get a mortgage.
Me, it was just, I looked at it, it made sense. Oh my goodness, the light bulb went off. This is the future. I'm looking at the future. Let me see if I can get this guy to come to NFM and we can build something around this idea.
Nearly 3 years later, NFM hasn't only generated thousands of leads and loans from this strategy, but they've also been able to better understand younger first-time homebuyers by analyzing the data gathered by this strategy. This begins when a follower clicks on the intake link in one of NFM's originators' social media bios.
Of the 60,000 people who have inquired in the 30 months, 97.5% of them want to purchase a home. 85% of them don't have a real estate agent yet. And of the 85% that don't have a real estate agent yet, 93% are raising their hand saying, introduce me to an agent. I'm open to it.
So what does that indicate to Scher?
So that really demonstrates how early on in the funnel we are and how much control we have over the process.
According to GWI, a market research firm, 54% of people who browse social media use those platforms for doing product research. Scher sees comments on videos or direct messages to the originators as borrowers' hands being raised for loans. That's where the nurturing comes in.
Nothing feels better.
The idea is to bundle the whole experience. We are experts. We're not going to be pushy. We're going to drip content on you to educate you when the time is right because you trust us. We're going to hand over an agent that we trust, right? And so it's all encompassing is what is the utopia.
But there's still a lot of work to do in building that utopia.
You want to talk about opportunity and just how much grander it could be. Only 18% of the people that go to our blue form fill it out. So you can imagine we're leaving 82% on the table.
Read more about how you can use social media to reach borrowers earlier in the funnel at nationalmortgageprofessional.com. For The Interest, I'm Ryan Kingsley.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI, AI you can bank on.
There are some key fundamental technologies that as an originator you have to have, and we've talked about a bunch, but there is nothing more important than a dialed in CRM. And really, CRM today versus where CRM was when I started in 2009 is totally different. CRM today is more of a marketing and social media engagement platform than it is just communication to your sphere of influence. At a minimum, if your CRM doesn't help you schedule posts on all of your social media channels, mostly business, not personal, if it doesn't allow you to say one-to-one, one-to-many, and one-to-some communication through text and email, and it doesn't have integrations to be able to leverage your data from your LOS, move in a new direction. There are a ton of great CRMs, not mortgage-based, that'll allow you to do that. From Salesforce to Pipedrive, which is only $10 to $15 a month, to my favorite, Go High Level, there's a ton of great options out there.
A grandfather's talking to his grandson, and the grandfather says, "Grandson, there's a battle happening inside of me. There are two wolves that are living inside of me. And one of those wolves, he's full of hate and anger and negativity and jealousy. And the other wolf, he's full of love and joy, tranquility and peace." And the grandson looks up at his grandfather and says, "Grandfather, that is horrible. Which wolf will win?" And the grandfather looks at his small little grandson and says, "The one that I feed."
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.